Welcome to today's video. On this one, I'll be breaking down my strategy from top to bottom, right? Or from bottom to top. So I have two trading models. So one is the opening model when the market opens, and then the second one is a continuation model. So only two. So now this is the plan. One, if the opening model is there, you take it, and either whether you make money or you lose, you will get off the chart, right? If the opening model is not there, then you simply wait for continuation. When continuation is there, you take it, whether you make money or you don't. Right after taking the model, you simply get off the chart, right? One trade a day, not two. Just because you have two trading models doesn't mean that you have to take two trades a day, only one, right? So I'll try my very best to do a full breakdown of how to make use of each and every single trading model that I have, right? This is my trading strategies, by the way. There will be some confluences that will be mentioned, like fair value gaps, breakout structure, market structure shift, and equilibrium and liquidity sweep, such and such terms, right? In order for you, if you don't understand any of these terms, there are videos which are made specifically for each and every single term or confluence, right? So you're gonna have to go into my YouTube channel and watch those videos if you don't understand, and then after watching them, then you're gonna come back to this one, rewatch it again, because you're definitely not gonna understand what I'll be showing you at the first glance, right? You're gonna have to rewatch the video so that you can drill this into your skull. So now let's dive into it. So the first one, which is the opening model, is pretty easy to understand, right? So what are we looking for on this opening model? At 9:30 a.m. New York time, right? 15:30 South African time, we wait for manipulation to a key level that can be a 5-minute high, 5-minute low, right? Equal highs or equal lows, or an hourly high or an hourly low, right? Then a manipulation to that key level, then we wait for a displacement into the opposite direction, or a change in market structure into the opposite direction, using one of these three: one, a break of structure; two, an inverse fair value gap; and three, a CISD, a change in the state of delivery. That's a CISD, right? So we wait for these three. Once we get one of them, then we execute. We don't hesitate, we execute right on the spot, right? What do we target? 2R or previous draws of liquidity, or key levels in the opposite directions. That is the model. One, manipulation of a key level; two, change in market structure shift; three, you execute targeting 2RR or other key levels at the opposite direction of what you took your trade on, right? That is the first model. So I'm gonna be showing you how or what it is that you'll be looking for. So let me do this. So let's say before 9:30 we'll have something like this, right? Boom. This is the market before 9:30 a.m. is the opening time of New York session, right? 9:30 a.m. New York's time. So the market will be moving like this, right? And then at 9:30 a.m. it's gonna come manipulate these lows, right? And then what is it gonna do? Displace up, get another displacement to the upside, right? And then what do we do then? We simply take trades right here. In this case, we're gonna take longs, right? Stop loss down to this low, targeting at least 2R if possible. If not, we will be targeting key levels that will be lying here, right? That will either be perhaps a 5-minute high, if we have maybe a high like this, if maybe the market did come to this point at some point. So we'll be targeting that, and then what will happen is the market will simply go to that key level, right? It's not gonna be a linear straight graph. It's gonna be like up, down, down, up, up, down, then eventually up, right? So this is how it's gonna go. And then let me do the same for if we manipulate lower. So let's say before 9:30, this is the market, it's moving, it's moving, it's moving, it's moving, it's moving, it's moving. Then 9:30 comes and what happens? Boom, the market moves up and then this plays down, right? When it moves up, this will be a sharp move up. Then we'll probably have a fair value gap that will get inversed here, right? Or we will have a low which will be broken down, meaning that we have a break of structure to the downside, or we will be having, for a CISD, we'll be having a series of up candles, and then perhaps we have a long wick down here, something like this, a wick, and then a candlestick closes below this candle's body. Then that's where now we execute, right? We're gonna take shots. I'm gonna show you chart examples. For now I just wanna make this. So let's say we had an inverse fair value gap there. It's gonna be short, stops there, and then targeting key levels to the downside, right? Again, perhaps the market came to this point at some point, right? Maybe this is an hourly low or a 5-minute low. That's what you will be targeting, right? You can target that, target that as well. So that is the first model. Now I'm gonna show you real life examples, right? I'm gonna show you what happened yesterday. It was beautiful. So let me do a bar replay and show you. 20. So 20 August. $15.30, right? 20 August. There, 15.30. So what did we have? We first come to the 1 hour time frame, right? We check the trend, or we check if we're bullish or bearish, right? And if there's any highs or lows that can be marked out. So what did we have in this case? We have this low down here. Was it taken out? Not yet. The market actually made an equal low, if I'm not mistaken. And then we have this high up here. Which trend are we in? In the downtrend, right? So that is the hourly time frame. Then we go to M5. I don't usually check M30, M15, and none of that, right? This proved to me that it works with only checking these time frames. So don't come in the comment section and be like, you have to do it this way and this way, brother or sister. I did check, so I know what it is that I'm looking for, and you're watching this video for a reason. So we have that. Right now, let's see. This right here was 15:30, 9:30 a.m. New York time, right? So what was happening before 15:30? The market was ranging, boom, boom, boom. You see? Then let's play one candle, boom. What happened? It displaced up. We manipulated high and came down. Did we break any structure down? Not yet. Okay, let's see what happens again. Boom. Are you gonna take longs just because this happened? No. Why? We didn't manipulate anything to the downside. So what will happen here? We're gonna have to wait and see if we're gonna get something out of this, right? So let's play a few more candlesticks. Boom. Boom. Let me just play. Boom. What do we have now? Another manipulation of this high, right? Or a sweep of this high, liquidity sweep. So what do we have after that liquidity sweep? A fair value gap. Now remember what we're looking for: a manipulation to either direction and a change in market structure. Okay, if we invest this, that will be a change in market structure, and inverse fair value gap is one of the confluences used for that. So not yet. Boom. Pause. Okay, let me do this. Right, so what do we do when this happens? We take shots. Boom. Stops there, that high, and this was a 1:1 risk to reward, right? Something like that. Okay, one. Okay, so we're gonna play a few more candlesticks and see what happens. So boom, you got bottom ticked, right? Boom. Voila, and take profit was hit. That was yesterday at the time where I'm recording this video, so I actually did take this trade. So I knew what was gonna happen. So this goes on to prove that this strategy works, or this model works, right? This is the first opening model. This usually happens in the first 20 minutes after market open. After 20 minutes, don't be looking for this. No, not at all, right? We'll be looking at the second model on whether it comes or not. So you actually have two choices. You can decide to trade one of these or trade them both. Well, I do both. So this here, take profit was hit, right? So let's go to 19 August and see if there was something or nothing there. I'm not quite sure what happened. 19 August there. Okay, same thing. What are we looking for? Key levels. So we actually have this 1 hour displacement, 30-minute displacement to the upside here, but we're gonna go to the 1 hour time frame. One moment, let me close this. Okay, so again, 1 hour time frame, we have this high, boom. So we have that high, we have this low. Beautiful, right? And then what do? We go to the M5 time frame, and again, if you look here on the 1 hour time frame, we are actually in a bullish order flow or in an uptrend, right? How? Because we just broke structure to the upside, boom. See? So we go to M5 and see if we can find anything. Boom, we have that low, we have this high. Now we're gonna mark our opening, boom, there. So pretty easy, same thing as what we were looking for. Then we head over to the 1 minute time frame. Okay, maybe if there are some points that are missing out, you'll catch up, right? That's why I said you should rewatch this video over and over again so that you can catch each and every single little detail. So when analyzing, we first start with the 1 hour time frame to check the trend and if there's any fair value gaps that we are retracing into, right? And then we also mark our key levels on the 1 hour time frame, the 1 hour high or low. If there are no highs, we go to the 4 hour, we look for a high or a low, right? And then what are we gonna do? If there's any sessions high in between those highs, we mark them out. If not, we leave them out, right? And then you head over to M5 and then you mark your most recent high and your most recent low. Then you go to M1. What are we looking for on M1? A manipulation to a key level, one of the key levels that we marked out, right? And then we're gonna look for a displacement into the opposite direction from that key level with a market structure shift, no, with a change in market structure, right? And then we're gonna take trades out of it. So let's do that once again. Boom. What do we have now? A manipulation to the downside, right? So we're gonna look for a displacement to the opposite direction and a change in market structure with that. So let's see if we get that. At this point we have this fair value gap up here, right? So there's fair value gap. Now let's see if we're gonna invest it or not. If it gets invest, we're gonna take trade out of it. If not, then we won't, right? So let's see. Boom. So that didn't get invest, and because of that we take no trades. We wait, right, to see if there will be anything during this 20-minute window. So I mean, we do have a breakout structure here, but am I gonna take trades out of it? No, I won't. If we sweep this, yes, and then we displace up, then I will probably take trades out of that. Let's see. Well, with that being said, it seems on this day there was no trade, I suppose. Let's see. Yes, so on this day the model was not there. That means there was no trades, right? Pretty easy, pretty straightforward. So this is the first model and the video is already 20 minutes in. Okay, so let's do another example. Let's try to find another example from the 18th and see if there's anything. If there wasn't, then wow. So Tuesday 15:30, let's see if there was anything there, right? Okay, so we're gonna mark out 15:30, which is the open, and then we go over to the 1 hour time frame, do the same thing. Which trend are we in? Downtrend. And do we have any lows that we can mark? No. That means we're gonna look to our left and see, well, we have that, so we're gonna mark that out, and then we have this high here, which is the most recent one. Then we go to M5 time frame and then we check once again. Okay, so now we have this high. Boom. So what is our scenario, or what are we looking for coming into the market? Well, since we are in a downtrend, it will be best if the market manipulate these highs, right, these key levels, and then we get a a change in market structure to the downside. That will be ideal, right? However, if we start by manipulating lower and then moving up, we are not gonna be disputing that. We're gonna take trades out of that, right? So with those ones marked, we then go to the M1 time frame and let's see what happened on the 18th. Boom. Okay, so this is the scenario that we were expecting, right, for it to displace up and then change down, right? It is not complete yet. This is the first step. So if we invest this, then we're gonna take trades out of it. If not, then well, boom. Pause. Okay, so boom. What do we do? Do you see how far this close is? Right? It's very far to the downside. So am I gonna take trades out of this? Not really. I'd rather wait for the market to come back to the CISD, but then this is how your 1:1 RR was gonna look like, right? Something like this, and then let's see, boom. So your TP would have been hit down here, right? However, let's say you didn't take the trade out of this because this invest closed very far from this, because now your stop loss is supposed to be up here, so you can't put your stop loss up here while your entry is down here, right? That's not a good risk to reward ratio. So instead, we're gonna have to wait a bit and see. Right, let's see if we can get anything. If not, well, that's also fine, isn't it? So what do we have again? Boom, is boom, a liquidity sweep of that high. Then we have this fair value gap here, which got inversed. What do? Short that thing, right? Because we didn't take this because the RR was not too good. Short this. So your stops were gonna be at that high, and then what were you gonna target? 2R. Remember, we target 2R or key levels. Now what do we have? We have this low down here, which is our key level. Wait a minute. Boom, we have that low, which you can target. Right down to that, and you can also target this one as your final take profit, right? So let's see which ones are gonna get hit and which ones are not gonna get hit, or if your stops was gonna get hit instead. So let's see. Boom. First take profit. First take profit hit already. What do? Move your stops to break even and let the rest of the position to run to your final take profit, right? Well, if it gets hit, of course. Like, this strategy is the best, bruv. The best. I've back tested it. I know the data. If you follow everything that I've said, you'll definitely make money. And get this straight, losses are there too. This is not a 100% win rate trading strategy. No, there are losses as well, which you're gonna take. So let me show you, for example, today's trade. So that will be the last example. I'm gonna split these videos into two because it's already 30 minutes long now, so I'll make another video for the continuation model. But for now, let me show you today's trade, which I lost some money on, but it's fine. Okay, so that's the opening of the New York session. What do? Go to 1 hour time frame, and boom, that's our low. Do we have any lows before this? We don't. Which high is our recent high, hourly high, and then we go to M5, right? Do we have any lows? That is our most recent low. So what am I expecting coming into the market? So I go to the 1 hour time frame. I'm like, okay, we are bullish, so it will be ideal if the market simply manipulate to the downside and go straight for those equal highs, right? Well, wrong. That's not what happened. So what happened was this. You see, we have this was during pre-market. I don't trade pre-market. I don't care what happens during pre-market. If we make any key levels, then I'll take those into account, right? So instead, this happened. Boom, boom, bang. We have a fair value gap there, which I was waiting for to get in first. We didn't get that, then boom, boom, we kept dumping. See, we took this 5-minute high. This is the hourly high. We took that as well. Then boom, we got a displacement to the downside, right? Taking this low. So I was like, okay, well, this is probably the liquidity sweep. And then we have this fair value gap. So I was like, once we invest this fair value gap, boom, I'm gonna take longs, right? Targeting my 2R. What? There. So I entered here. Let me just leave it. So I entered on once this candlestick closed, because I'm very fast. I'm the best when it comes to pulling out on the last minutes. So I entered there. Then I was floating some profit, and I was waiting for the market to actually break this structure to the upside in order for me to go break even right here, right? And then this was my 2R there, right? And then what happened instead was this. Boom, boom, not stopped out yet, back to entry, then we got stopped out. So the strategy is not 100% win rate. I'm showing you this so that you don't come for me. There are losses, but then the number of losses you're gonna take are way less compared to the number of wins that you're gonna get using it, right? So this is the opening model. So for now, thank you for watching this video, and I'll see you on to the next one. Cheers.